it is indeed my pleasure to tell you that our next guest here is Dennis Gartman. Dennis and I have been friends for donkey's years. He's been writing his daily letter about the markets for over 30 years. His letter is read all around the world. Tens of thousands, believe me, professional traders read his letter every day. He comments on the currency markets, commodity markets, crude oil, certainly, grain markets, stock markets, and then takes an interpretation of the political landscape. He is regularly on CNBC and other of the financial news channels. He speaks at a lot of financial conferences. Dennis and I have even played golf a couple of times. We've had lots of dinners at different places around the world. And one of the things that I like about his letter, and I'm sure a lot of those professional traders like, is that Dennis gives specific trades that he's doing in his own account when he talks about the market. So, Dennis, welcome. It's so great to have you back on Money Talks.
Great to be here. They're obviously scraping the bottom of the barrel in both instances. Mike scraped the bottom of the barrel, put you on, and you scraped the bottom of the barrel and put me on. Let's hope we can come up with something interesting, funny, and useful.
Well, that's a great start. You are the liberal arts major that tries to explain to the currency trader what's going on in the crude oil market and vice versa. How do you frame that again?
Yeah, I've always said when I started writing this back in 1987 on a full-time basis, I thought that I would be the liberal arts major of the capital markets, the fellow who could talk to the foreign exchange trader about what's happening over in the crude oil market. I can't tell a crude oil trader more about crude oil than he knows or she knows, and if I can, he or she won't be trading crude oil very long. But perhaps I can keep the crude oil trader from being blown out of the water by something that's happening over in the foreign exchange market. I can't tell the foreign exchange trader more about that market than he or she knows, but perhaps I can protect them from something that's happening over in the political environs. My job, as I see it, is to look down on what's going on from 35,000 feet, have an understanding after almost 40 years of being in the markets about what moves the psychology, what moves the fundamentals, and write it down in an early morning. I get up at 1 a.m. Eastern time so I can have this thing out to everybody by 5 o'clock in the morning, and with a bit of humor, hopefully, every day, and a cogent analysis to keep people informed on what's really going on. So that's my job, and I've been very fortunate. Very few people in life get to say that they love to do what they do. I love to do what I do.
Well, not only humor, but humility. I know I see a lot of letters that are written by people that are offering their views and their opinions about markets, and a lot of them seem to have selective amnesia when they're wrong. You own up to it right away, and that's that part of trading. You got to be prepared and willing to take your losses as you go along.
And absolutely, it's probably more important than being able to take winners is to be able to say I'm wrong, and to hopefully learn something from it. It is amazing how interesting the markets can be, how often you can be wrong, and the objective here is to be wrong, not fewer times, but to be wrong on smaller occasions, and to admit it as rapidly as one can. That's I think the important thing here.
Dennis, you start your letter almost always with comments on the currency markets. Of course, our folks here in Canada are particularly interested in what you think about the Canadian dollar. Let's start with the currency markets. What's your perspective? What do you see from 35,000 feet?
Well, I think, first of all, talking about the dollar versus the euro, we'll speak about that first. I think the euro is going to get demonstrably weaker. It has been weakening up now for quite some long period of time. And I suspect that trend toward a weaker foreign exchange market, toward a weaker euro, is going to continue going forward. I actually believe that by the time this is done, we'll trade the euro down towards par, if not below there. It was, about 2 years ago that we were actually trading the euro above 140 euro to the dollar. Now here we are at 112, and I think we're heading on our way towards par because the political circumstances in Europe are really as fractious as I have ever seen them. We have separatist movements starting in a number of countries. We have far right versus the far left in a manner I haven't seen in quite a long period of time. And the basic country of Europe, Germany, is having as many political problems as we have ever seen it having in the past decade or two. So I think that on balance, the U.S. dollar, and I think by extension, dollars generally, and when I speak about dollars generally, I usually wrap the U.S., the Canadian, the Aussie, and the Kiwi into one kind of nice little package. I think on balance, dollars will do demonstrably better than shall the euro over the course of the next 6 months, 1 year, even going forward to 2 years. I think the dollars will get stronger. Concerning the Canadian dollar, the violence of the past month and a half has really quite surprised me. We've seen the Canada versus the U.S. moving 100 pips down, 100 pips up, 100 pips down, 100 pips back up, and doing it in violent swings. It makes very little sense to me. I do tend to look at the Canadian dollar. I look at it in terms of Canada versus the U.S., and we have seen the Canadian versus the U.S. trade above 140, Canada to the U.S. dollar. I think that's actually going to make its way back closer to 120 over the course of the next several years. So if I'm going to take a position on Canada versus the U.S. dollar, I'll probably err on the side of being bullish of Canada, bearish of the U.S. dollar on balance. That doesn't mean I shall always be that way, but probably on balance, that's the way I shall lean.
Yeah, and when you are taking your trading positions, I mean, it's going to change from time to time, but what do you think is your time horizon typically when you take a trade? I mean, is it it's not 2 hours, but maybe it's a couple of days, a couple of weeks, a couple of months, years? What do you think?
A couple of days, couple of weeks, and hopefully something that might last for several years. For example, when I'm bullish of gold, but not in U.S. dollar terms, because I think the dollar is going to get stronger. So I'm bullish of gold in the currency that I think shall be the weakest, which is going to be the euro. I want to own gold, and I want to pay for it with euros because I think the euros will devalue. I've actually had that trade on now for 4 years. It started off as a short-term trade, but it continued to work. It held firmly. I think it has fundamental merit to it. So on balance, I would say that my perspective would be for the next 2 weeks, but if something continues to work, why not continue holding it? And in the case of gold in euro terms, it's been working.
So bottom line then, on the currency markets, you are U.S. dollar bullish and the other dollars bullish, but the one that you really got in the crosshairs is you think the euro is going down.
To par. To par versus the U.S. dollar, if not lower. Now, what may interestingly happen, I mean, you're starting to see the European economy itself demonstrably weaker than is the U.S. economy, demonstrably weaker than is the economy in North America, and the political environments being far more confusing. And as I like to say, confusion always breeds contempt for whatever instrument you're trading. I do think that we're going to trade to par, and I wouldn't be surprised if we trade under par. Now, the question shall be, if you have another exit of one of the major countries, and you have to start thinking that Spain could do so, that Portugal might do so, that Italy might do so, now that England has voted to do so. If that happens, during that period of confusion, the euro will get demonstrably weaker. But there shall come a time when, and it may be 4 or 5 years from now, that's a long way into the future, when you have a rump euro comprised of the northern countries, that could get demonstrably stronger, but that's a long way into the future.
We'll take a break, Dennis. I need to go to take a commercial break here, but when we come back, we'll talk about crude oil, we'll talk about the stock market, and if we have time, we'll talk about the political landscape and, of course, the election looming in the United States, what that impact that may have on the markets. We'll take a break here. We'll be back in about 3 minutes. You're listening to Money Talks all across the Chorus Radio Network. Well, welcome back, everybody. We've got Dennis Gartman on the line. We're talking about the euro in particular in the currency section there. Dennis sees the euro fraught with all kinds of problems and headed toward par. The euro right now is around $1.12, $1.13, that sort of thing. So possibly a good move down in the euro. And with respect to gold, Dennis likes gold, but he likes gold not so much against the U.S. dollar, but he likes gold in terms of the euro. Very interesting perspective, and you can certainly trade it that way. Dennis, we're going to go through things here because we're always running out of time. Crude oil. I know you always have a special section in your letter on crude oil. The supply-demand story. I mean, we've had a huge move in crude oil over the past couple of years. Again, from 35,000 feet. What do you see in the crude oil market?
The trend, I think, is still clearly downward. And one of the things that I watch is the contango, the the carrying charge. I've learned over the course of the past two decades that as goes the contango, so goes crude oil. If the front months are losing relative to the back months on up days and on down days, if crude is bidding for storage, as I like to say, that's telling you the story of an abundance of supply. And I think we have an abundance of supply. Clearly, we're seeing the 1 year contango now is out to $5, and at $5, if you've got spot WTI, let's call it at $43 a barrel. If 1 year forward is at $48 a barrel, hedgers are going to be very amenable to producing crude oil in the better production areas of the Permian, the Bakken, the Eagle Ford. They're going to produce crude oil and sell that deferred future because the bankers are going to ask them to do it, and do it with alacrity. They'll be aggressive in doing so. Fracking has changed the world. There's not a question about that. We continue to find frackable lands here in the United States. Apache just announced a huge new find in southwest Texas that they think might have as many as 2 billion recoverable crude oil barrels. And as in speeches that I have given over the past several years, I've often euphemistically said, concerning fracking, unless you think that God was so segregationist, and I use that term euphemistically, and only allowed the United States to have frackable land, you're naive. There is frackable land to be found everywhere around the world. Argentina just announced a huge new find of frackable, capable oil that they may have 2 to 3 billion barrels of crude. If Argentina has frackable land, Canada has frackable land. Saudi Arabia has frackable land. Australia will prove to have frackable land. Russia will prove to have frackable land. And they will all be the beneficiaries of the economies of scale that American frackers have learned on their own, driving the cost of production. Let's say 4 years ago, good fracking land probably required $70 to $75 per barrel to make it profitable. Now you can produce crude oil at $18 to $20, and that will be even lower next year. So the world, I think, is going to be abundantly supplied with crude over the course of the next 20 years, all because of better technologies. That can't be anything other than bearish. And I think the Saudis understand that not only is more crude going to be found and found more amenably, but the ability to drive the usage of crude oil steadily downward. As I like to say, my first car in 1967 was a 1965 Plymouth Valiant that got 7 miles to the gallon. New cars nowadays get 30, 35, 40 miles to the gallon, and 5 years from now they'll be getting 50 miles per gallon. So we are finding more crude. We are using it more efficiently. That can't be anything other than bearish for the crude oil market. I know that Canada, especially Alberta, will not like to hear that, but I think that's the harsh reality.
Dennis, we're going to move right along before we run out of time, and I appreciate those extensive views there on crude. It's certainly a supply-side story from where you see it. The stock market had kind of a quiet, listless summer, and then as we got into September, we started chopping around. It seems there's folks that say the stock market's richly priced. Other people are saying, Tina, there is no alternative. What do you think?
I think there is an alternative, and I think the alternative is cash. I think that stock prices are extremely high, extremely overpriced. I think the propensity on the part of economic activity to increase and at the same time put downward pressure upon stock prices because money will move from the capital markets into plant and equipment and employment. I think that alone is going to be detrimental to share prices. The economy can do better. Stock prices may do, I think, a good deal worse. So I'm not a believer in Tina. I'm a believer in Cena. Cash is the other alternative. I think that's probably the great place to be right now, is on the sidelines. Oh, I know you have to have some exposure to the equity market. I understand that completely. You can't be fully out. But I think if you were fully invested 3 months ago, probably it'd be a better idea to be half invested going forward for the next several months.
And Dennis, while we have time, I mean, we've got to address the political view of things. I know you've always had a big section in your letter where you're doing a political analysis because it's just so important to the capital markets. We could start with Trump and Hillary. I mean, what do you think about that?
I don't like either of them. I probably will end up voting for Mr. Trump only because I cannot vote for a leftist. But I am embarrassed by the fact that these are the best two candidates that the United States of America can put forth as our leader, I'm stunned by that fact. I suspect that she's probably going to win the election, but I must admit, in the last week and a half, her momentum has turned demonstrably against her. Momentum has turned much more in favor of Mr. Trump. I'm surprised by that fact. She didn't do herself any favors with the stumble this past week at the 9/11 memorial. That certainly is going to hurt. And he seems to be handling himself a little bit better in the and looking a bit more presidential. He had a speech in front of the New York Economics Club on Thursday. I watched that, and he actually was really quite impressive. In fact, more impressive than I've seen him in the past several weeks. So I thought a month ago that she would win 45 out of 50 states. I think she still wins the election. I will be terribly dismayed by that fact. But instead of her winning 45 states, maybe she only wins 35.
And in terms of the Electoral College, the market seems to have assumed that Hillary is going to win. So you and I both know if the market gets surprised, you usually get the dramatic price action. If it turned out that Trump won, looking across the markets as you do, is there any one thing or two things that you think might happen? We've got about 30 seconds here for an answer.
Historically, Republicans are very bad for stock prices. They're very good for the economy, but historically, Republicans are very bad for stock prices. I think the market would be terribly surprised if he were to win. I think that would be terribly detrimental, at least for the first 6 months, maybe a year of his administration. Perhaps after that, you would turn it the other direction. But historically, not a good thing when Republicans, and I am a Republican, I'm of the right, but the market tends to not do very well during Republican administrations, tends to do very well during Democratic administrations. Why? Because they tend to be expansionary in their policies.
Dennis Gartman, my dear friend, I wish you good health and good trading, and I look forward to seeing you the next time we get a chance to get together.
Let's play some golf and let's have a martini.
Dennis Gartman, everybody. Thank you very much, Dennis. We'll talk to you soon.
Cheers.
Well, I guess I said goodbye to Dennis just a little faster than I really had to, but we've just got 2 minutes here. Let me give you a quick review. Looking at the euro currency, he sees it being a lot weaker against the U.S. dollar, but also weaker against the other dollars, as he calls them, the Canadian, the Australian, the New Zealand. The Canada, he's been surprised at the violence in our move. Basically, his view is over the next couple of years, he says, he thinks the Canadian dollar may do better against the U.S. dollar. His favorite trade, and I know he's had this trade on for 4 years or so now, he's been long of gold in terms of the euro. Most of us think of gold in terms of the U.S. dollar. He's got that trade on where he thinks the euro is going to weaken, but the way he chooses to play that, instead of being short the euro and long the U.S. dollar, he's long gold and short the euro. He had some very interesting comments there on crude, some very extensive comments on crude, but basically the message was he thinks the price trend is down. Fracking has changed the producers can now make money at much lower prices. He's even suggesting in some areas maybe as low as $20 a barrel. That seems an astonishing number. And then I love this line, the world will be abundantly supplied with crude oil. As there's a lot of crude coming on, there'll be frackable land in other places of the world besides the United States. And of course, we're always using the energy more efficiently. Stock market, I guess two things there. Tying that in, he thinks that stocks are richly priced. Cash is not a bad alternative. And then on politics, the market, of course, is priced for Hillary to win. If that doesn't happen and Trump wins, he says Republicans are always bad news for the market. I should say always, almost always bad news for the market. He would see a Trump win, meaning the stock market might take a hit.